No. There we
There we
go.
go.
Come on. And we're live, y'all. Okay. So, welcome to the Anything Can Happen show with Kenya Asa, Kwesi Dreams, and your man Cat Fitness. Today we have, oh my God, a super knowledgeable brother that's going to teach us about family banking, y'all, how to create generational wealth. I want to pass the ball over to Brother Kwesi to give a proper introduction to this king that's going to share this information with us today. Can you tell us a little bit about him over there, Brother Kwesi?
Absolutely. So this brother here is here to teach, empower, and educate us on many topics, specifically within the world of finance and economic empowerment. But Mr. Hasani Houston, as a former college athlete, he took his competitive edge and teamwork experience and transitioned into the financial industry. Starting back in 2008, Hasani was originally looking for ways to help his own family, but quickly found more than his family needed help. He became a broker in 18 months, right? Became a senior broker within the financial industry with no experience within his first 18. And in 2012, he opened his own office and was recognized in Forbes Magazine for his impact on the community during that time. And in 2014, just 2 years later, Hasani's career took a turn when he began to focus more heavily on the concept of infinite and family banking, which we'll talk more about today, as a tool to help others achieve financial independence. Sheesh. More recently, Hasani now has a focus on developing an agency and empowering others to help educate America about the powerful concept of infinite banking. Goodness gracious.
Man.
Wow.
The president is here.
Welcome.
If you don't mind me asking, what did you do for college as a college athlete?
Football. Cornerback.
Football. Okay. What you?
Yep.
You what? Corner.
I was a corner. Yep.
Okay, that's what I was about to say. I was like, you had to be like a DB or something.
Oh yeah, absolutely. Well, when it says Cat Fitness, I know you got an ear for it. You know, I know you know what it is. You know.
Yeah, man, that's what's up. So after your football career, you're like, okay, I'm gonna hang up the cleats. It's time to get into the real world. You know, start my 9 to 5, and then you found financial literacy.
It's funny you say that. It actually happened like the exact opposite of that. I had no intentions of hanging up my cleats. It just happened off of default because I got injured, and then my dad got sick, so I came home, and then I was forced to find a job because my family went from over $250,000 a year to $30,000 a year in 2008. My mom was in real estate. My dad was in transportation management. He had his heart attack. Obviously couldn't work anymore. My mom stopped selling houses, nursed my dad back to health. And then they lost their retirement funds. Then they lost their investment properties, and we're down to our primary residence. So I had just got a job for $30,000 a year just because they accepted me the fastest, so I can help pay some bills. And then after that, I was just looking for some opportunities where I was, you know how you just get frustrated. And you're like, man, I was told if I go to school, get good grades, graduate, get a good job, everything will be all right. Well, my mother had a master's. My dad had a bachelor's, I had a bachelor's, and yet we still struggling. So something didn't add up. And so that's what propelled me into the industry.
And still has some college debt.
Yeah, exactly. To add a cherry on top of the cake.
Yeah.
How did you, can I ask you, Hasani, what brought you into the industry? Did you meet somebody that was doing it, or did you read something online, or how did you find it?
Great question. It was actually very, very random.
Is anything ever random though?
I'll say it was random in my expectations, but purposeful in the grand scheme of things. Because I will say that I did put out the intention to look for something in finances. I never intended to work. I just wanted to learn about it so I could fix our situation.
Right.
And so I came across a couple because I worked at Enterprise Rent a Car. That's where I worked. And so, you know, you meet all kind of folks going through there. And so the lady told me that, or the gentleman told me that I could actually learn about finances if I attend one of his seminars. That's what got me.
Okay.
So I said, okay, let me show up to the seminar. Let me see what they're talking about. Oh yeah,
real gen. He's like, how much you making here? Oh, that's
right.
You want to double your money? I might got something for you.
Right. And so it sounds like, what was it that even got him to to talk to you? You know what I mean? Was it just that because I think that so many people, we're not always chatting people up. We don't, was he thinking, oh, you're kind of a friendly person, or like, how did he even get to in a conversation with you and then invite you to something like that?
So I was helping them with their car, and his wife was being difficult. And he said,
"You have the patience of an angel."
Right. And he said, "Hey, bro."
Wife.
Right.
If you can deal with my wife, you can definitely be successful in this business.
That's basically how it works.
Wow.
He was like, "Yo, like you have amazing customer service skills. You were really patient. I appreciate the way you dealt with us, specifically my wife." And then after that, he said, so how long about, then it just turned to a natural conversation from there. And yeah, it's so interesting because I don't even know how we got on the topic of finances, but we did. And then he told me I could learn about it. He didn't even offer me to work. He just said, hey, well, based off what you're saying, we have a seminar that we host that you can learn some more information from, and that might help you in your current. So I went purely just to learn more because that's what I wanted.
Right.
So
right.
Yeah.
We tend to hear about all types of financial literacy seminars and different things like that. Like, what really stood out to you when you got to this particular seminar that you knew that it was for you, and it was something that could potentially change the community with this information that you were receiving?
You know what? It came to me in pieces. I'll say it like this. I'm sitting in a seminar and I'm hearing people say tax-free guarantees, things they don't tell us in school. So everything they said resonated with what I was going through. They said, hey, I learned this. I learned about this from my studies, but they didn't teach me this in school. Ears perked up because I felt the same way. Why am I suffering when I studied finance in school? Right. Another thing they talked about was just guarantees. You know how people are losing money. Well, at that time, I had heard about people losing money. We had lost a home. And I was like, wait a minute, you could stop that? You could put a stop loss on losing money? I had no idea. So it was all I was seasoned for the moment, if that makes sense.
Right, right, absolutely.
Everything they said just resonated with me because of what I was going through at that time. And then tax-free. I knew that tax-free was a big deal because my mom had to pull money out of their retirement plans because they lost money in the market and my dad was suffering. So they pulled money out and they got hit with taxes and penalties. So I was aware of that. So again, it just me being seasoned with all the tests that was going on at that time, it made me open to those opportunities or open to that knowledge to even learn to apply it. So I became a client first. I didn't try to work. I immediately sat down and said, okay, if everything you're telling me is correct, I want to save now because that could prevent the next time something like this happens. I don't have to go through what my parents went through. I want to save now. So I started out as a client and I kept in contact with the people and they told me I could work with them based off of, they said, you're learning the concepts. You might want to get paid. I was like, nah, I work 7 to 7 already. I'm cool. And the thing that changed that perspective was I remember like me and my friends were getting together at one of my friends' house and, a group of us getting together, just kicking it or whatnot. And one of my homeboys said, man, I think I'm going to get a third job.
Ooh, third job.
A third job.
I said a third job for what?
We're going to bypass second.
I said, what, why? What are you doing? What are you talking about? Yeah. And he said, well, you know what? I got these goals. I want to go out and do this. I want to do that, do that. And what was funny is I remember going home that night thinking, I was like, damn, he talking about getting a third job and I don't even want a second. I said, you know what? Let me see what I could do. I said, but wait a minute, how much they going to pay you on this third job? Like how much money are you going to make total? Yeah. I said, I'm not against you working hard, but how much we going to make?
Yeah.
And that's what stood. Exactly. And to my friend's credit though, work ethic like no other, like he's going to work regardless. And that just made me think, I said, well, if he could look for a third job, I could look for a second to help push me along for my goals in life. And that's what made me respond back to the agents at the finance company when they had mentioned or talked to me before, that moment when I had talked to my friend, that's what made me like be able to say, okay, I need to work.
And I
didn't think I could at first.
Your friend, does he live in California or in the Bay Area?
He does. We all went to middle school and high school together.
Mm-hmm.
And so I went to high school in the South Bay. We all played football together. We all had to make a shift where we had to get a job, and we was like, this is not what we planned for, you know?
Right.
Yeah.
And so yeah, and funny enough, he actually started. He actually said, "I think I'm gonna work for the finance company." He told me that first, and
the finance company that you were already looking into. Wow.
Yeah, and I said, "Well, you know what, bro? I have nothing bad to say about it. I'm a client. Knock it out. And if you need help, I'll support you. You know, however you want me to support you."
Wow.
Did he initially go to the seminar with you to get the information, or he just had a whole another experience?
Whole another experience.
Wow.
Whole another experience.
Wow.
And so I just told him, I said, "Hey, I'll support you however you need me to." And I just can't start working right now because, you know, I'd already said I wouldn't, and I told the guy there that if I did, I'll let him know. And so I'm just not going to work. I'll just support you, you know.
Yeah.
And then that same person told me he was going to get a third job later, and he didn't keep working with them. So that's what made me think about it and be like, okay, well, let me just go back and see what they're talking about. And that's how that happened.
That third job, I've done it. That third job is a beast.
It is.
It's a beast, man. Yeah.
Yeah.
Wow.
My dad has that same work ethic. Like, if he got to take care of his family, he's going to take care of his family, even if it runs him to the ground. You know?
Wow.
Yeah.
So how long until you were working this second job that you realized you needed to let go of the first job because this is where you need to be?
6 months. 6 months.
6 months.
Wow.
Okay. Yeah.
Good.
That's not very long. That's not very long. That sounds like did you feel like that was a leap of faith at that time after 6 months? Or were you just like, were you scared to let go of the first job?
So I was young. I was 22. So fear wasn't a part of it in the sense as it would be now that I have a family and things of that nature. Yeah. Yep. So I would say that helped a lot. But in reference to your question, you said what made me quit? Was it because I saw success or because I just saw as a leap of faith? I would say it was a mixture of both. Mixture of both. Success is very relative. Like compared to what I could have been making, that's how I saw it. I said, okay, I'm getting something, but
I'm only doing it part-time.
Exactly. I said my job's in getting in my way. Like I need to get rid of my job. You know, and it was a radical decision, you know, because ironically, so I was 22 years old and I had people that was 40, 44, and 50 years old working with me, and they had tech jobs. So I just never told them about enterprise because then they really, because you know, all the folks was like, you know, you could be my son. I ain't listening to you. So, so that was my experience as far as, you know, quote unquote success. So I was like, well, let me go all in and see how much further I could push this thing. And my mom was working with me sparingly, aside from taking care of my dad before he had a second episode. So yeah, that was my beginning experience, if you will.
Yeah. And I want to ask you this, you know, like it goes without saying that there aren't enough of a Black African-American representation within the financial industry. So what was that like for you, especially being 22 years young? What was that experience, that introduction like for you coming into this industry?
It was first, okay, I see what everybody's doing. I see how they're making money. Let me be the spook who sat by the door and soak up as much knowledge as possible and see how I can implement it. And then two, it was, okay, if they're telling me they're going to allow me to build an agency and they're going to allow me to open up an office, let me broaden the horizon then and introduce more people to this. Let me show them another demographic that they're probably not used to, that they probably don't see too much. That's how I thought about it. Right. Yeah. And that was my outlook and my, I don't want to say mission when I came in, but it was definitely a part of my driving force. Definitely.
Absolutely.
I was going to say
that.
Oh, go ahead.
Go ahead, Kat. So I was going to ask, like, how has that evolved since you were 22, right? And if you don't mind me asking, what's your age now?
35.
35. So in the last 13 years in this industry, how has that original intention evolved into what you're doing now?
So you have your moments where you have moments where you run into the stereotypes. You know, black folks can't work together. Black folks are broke. You know, and one of the things that I would say, and I don't care what industry you're in, one of the things that I would say is it's easy for you to fall victim to those stereotypes. It's very easy for you to fall victim to those stereotypes. And if you look at the history of our folks in this country, one of the things that helped us succeed was the adage lift as we climb, right? We lift as we climb. And I was guilty at times where I was like, you know what, I just let me get a bag first so I could prove to everybody that this can make money. Because, you know, sometimes our folks be like, you know, I will work with you. Yeah,
Right.
I'll work with you. But let me see you with that cash, you know?
Right.
Can you do better than old
prove
boy?
it works.
Exactly. Exactly.
Yeah.
So the other approach for me was not just showing them the cash, but showing them how to get into other markets. Because the other thought I had was, okay, I can, to me, even if you have, because I had some people come in and say, well, you know what, Hasani, I feel uneasy because we're the only ones here and no one understands us and this isn't built for us. I said, I think you're looking at it wrong. What if we recruit somebody else who doesn't look like us and then we send them to the demographics where they don't allow us to be, and then we still make money, right? Yeah. So that's I would say it evolved as time went on based off of, you know, personal situations where I had to focus on making money to help out my family, or what better way could I educate our community, or what better way could I serve our community? Is it better to help them out as clients first? Is it better to help them out as agents next? Or, you know, it all depends on it all depended on what I was feeling, what the vibes I was getting, and where I was at location wise too. That made a huge difference because in San Jose, where I lived at the time, Black folks made up less than 5% of the population. Versus if I went up to the East Bay, we made up a bigger majority. But you also have us in all classes, all economic classes. You know what I'm saying? Yeah. So I tell people, and what I've learned is the same problems that you think you have with our folks is the same problems other people have with their folks. The difference is that the sample size from which they can pull from is larger, right? So some of the benefits might be highlighted more because they're just getting a bigger sample size. Whereas if I'm in San Jose and I have 5% population and I only have 1,000 Black people, well, I'm not going to get the same results as someone who has access to 10,000 people, you know, in that area. And so me understanding business and understanding how that works and understanding how to include how to broaden the scope of what we're trying to do as a company, but not leave our people, not sacrifice our folks in the process. That was a big evolution for me.
You had to increase your law of averages, right?
Exactly.
Woo!
Exactly. And in doing so, making sure that we still benefit from it.
Yeah, most definitely. What was one of the things that you felt like was when you first started in the business that really grabbed people's attention? Because you were starting off so young, you know, trying to build people's trust with their finances and everything. What was something that you found like a niche that when you told them some information that they might have not been familiar with, they were like, oh, I can really do that? That kind of like pulled people in and said, okay, let me take a chance at investing into this
because we're not always a trusting people.
No,
we're not always a trusting people.
We're gonna throw money under the mattress before we invest it into something that can benefit us.
Can I speak honestly about that?
Yeah,
please.
Yeah, okay, please. Openly. Okay, all right. So what I learned was, oh man, this is such a funny growth. So what I learned was people were interested in the same things that caught my attention. The fact they can get guarantees on their money. So in other words, what that means is there are investments out there where, for lack of better terms, you can get insurance on your money. So basically, when the stock market goes up, you earn. When the market drops, you lock in that value. We weren't taught that, right?
No.
We weren't taught that. So you can get insurance on your money, and you can pull that money out tax-free. In comparison to, or I should say, in contrast to what we're traditionally taught, put your money in an account where you could lose it. When the market goes up, we earn. When the market goes down, what happens? We lose. Exactly. See, and we think that is the ultimate truth. That is not the ultimate truth. And you don't even have to go based off what I do. Just ask somebody who trades options and ask them how they feel when the market goes down. Ask them if they still make money, right? And so I found that people were attracted to that, but then it started being like, oh, Hasani, this is great information. Thanks for telling me. And that was it. Like, oh, I learned something. This is great. This is great. Yeah. But then when I start talking to people about, this is what these other communities are doing, I'm helping them with this all the time. Then all of a sudden, some of them wanted to do something about it.
They had the fear of loss, right?
Fear of loss. And so you said I can speak honestly. So when we talk about the white man's ice is colder, sometimes I had to learn how to use that analogy when it came to offering these products.
Ooh.
Yeah. Makes sense.
Wow.
We're
gonna get into it.
when we know what we're dealing with, we deal accordingly. Some of our leaders in the past said that unfortunately our folks are sick, and we can't expect them to make a healthy decision with a sick mind. So we deal with them. We meet them where they're at, basically.
Right.
Amen. Amen. So let me ask you, Hasani, like, what specifically do you provide within the financial industry? We know it's a huge industry, multiple trillions of dollars. What angle do you take specifically that could help somebody out who's watching this either live or in our rebroadcast?
So specifically, what I'm branding on right now, I can help people broadly with financial services in general. The whole nine. But specifically, what I would say is the thing, infinite banking. And the reason why I say that is because with infinite, yes. Okay. And the reason why I say that is because with infinite banking, basically what this does, it's a concept, not a product. It's a concept, but it uses permanent insurance. Here's what it is. Infinite banking is the ability to leverage your money through an insurance company to spend the same dollar twice.
Wow.
Now, I just want you to imagine that just for a second.
I'm not a genius, but that sounds like multiplication right there.
Exactly.
It sounds like addition. It sounds like multiplication.
Right. I saw you talking about your IG on your IG, and I'm like, I need to know what he means by that.
Exactly. And so and that's exactly what I'm talking about. Even on a basic level, if you just had a chance to spend your basic everyday dollar twice, what would that do for you? That would expand your capabilities. That's why I think the concept is so powerful. Now, with that being mentioned, to answer your question, Kenya, how does that work? Well, we're utilizing insurance companies. Here's why. Because one of the things that we're doing is we're making people the bank. Now, if we're going to make people the bank, there's a couple things that we have to put in place. For example, one of the things that happened back in the day when the market tanked, people were concerned about the return of their money versus the return on their money. They want to make sure what they put in, they get back, right? So they were really concerned about security. So a lot of people used to ask about FDIC. Well, the funny thing is, I always ask people, do you know what FDIC stands for? Federal Depository of Insurance Corporations. So the banks that you put your very money in are insured by insurance companies.
Wow.
Now, when it comes to infinite banking, if we're going to make you the bank, if the banks are insured by insurance companies, shouldn't you be? Yeah. Right? If we're going to make you the bank, at least, right? Now, on top of that, here's the other difference. So people say, well, is my money going to be FDIC insured? I tell them, great question. I'm glad that you care about the safety of your money. But my question to you would be, do you want to be insured up to $250,000 like the FDIC, or would you rather get insured by the company that insures the bank dollar for dollar, regardless of how much money you put in? And then the answer goes without saying.
So if somebody didn't see themselves having or holding more than $250,000 at a time, would you still recommend that strategy?
Absolutely. for a couple of reasons. Number one, so even if you don't have more than $250,000, then that just means that you're insured up to $250,000. Fine, that's cool.
Mm-hmm.
But the fact that you can spend the same dollar twice, you can't do that at the bank.
Yeah.
You can't do that in any other investment. So why wouldn't you? You know,
Wow.
That's how I see it.
Yeah, absolutely. And let's talk about this, because this is a concept that I really want our viewers to grasp in the live and also in the rebroadcast. So you talk about spending the same dollar twice. It sounds to the common viewer, it probably sounds like cheating, right? Or like you must be taking something.
Right.
How does that work to spend the same dollar twice when only have $1?
Great question. So let's talk about it from the legal standpoint first, and where it happens on a regular basis legally, right?
Mm-hmm.
And I stress that because everything that I talk about has no gray area. Everything is black and white. It's in the law books. It's real. You can look it up and it works, right?
Wow.
And I do that just to provide security for people. But
facts.
Exactly. Like this is no hearsay, right? But basically, how does it work? If you were to put money in the bank, let's say you put over $10,000. Let's say you put $100,000 in the bank. If you went back in an hour, I don't know if anybody's ever put over 10 grand in the bank, and I'm not talking about y'all, I'm talking about your listeners. And they try to go back and get that same money within a certain time frame. A lot of times they're going to tell you, no, you can't touch it right now.
Right.
Wow. I
can't touch it right now.
Can't go get my own money. Yeah.
Correct.
Whose money is it?
Exactly.
Yeah.
Now, here's a more important question. Now, we know assets versus liabilities. Most people, talk about it, I should say. But as Robert Kiyosaki defines it, assets are things that add money to your pocket. Liabilities are things that take money from your pocket. So with our $100,000 in the savings account or in a bank account, is that an asset or a liability to the bank? And before you answer, the reason why I'm asking this is because if I were to ask people what's the number one asset a bank has, majority of the time people say our money. Isn't that true?
Mm-hmm.
Yeah.
Right. But now, based off that definition, the question is it really an asset or is it a liability? And when we think about it like that, well, let's say, what would you guys say? Let's say that before I say anything else.
Uh-oh.
What would you guys say? Is it an asset or liability?
Liability, because you can leave.
Okay. All right. So it's a liability for the bank or for you?
For myself.
Okay. All right. Well, what about, so now I want you to think from the bank standpoint. If you put your money in Bank of America, is Quessy's $100,000 in your bank asset or a liability for you?
It's an asset to the bank. Yeah.
Okay. All right.
They're gonna make money on my money.
Okay. All right. All right. So check this out, y'all. Technically speaking, it's a liability. Now, how could I prove that? If you were to write out your assets and liabilities chart or your profit and loss statement, right? Basically, when they ask you about your bank accounts, isn't that listed under assets?
Mm-hmm.
Yeah, your bank statements or your bank accounts are listed under asset. It can't be an asset for you and the bank. That's number one. Number two, the reason why it's a liability based off Robert Kiyosaki's definition, they pay you interest. They have to pay you. I mean, it's pennies on the dollar, right?
Right.
Or I should say pennies on top of pennies. But technically speaking, it's still a liability because they're paying out.
Okay.
So if you put $100,000 in the account and you get interest on it, that's a liability to the bank because they got to pay you, right?
Wow.
So now, but to Kat's point, they're going to take that $100,000. See, here's what the bank does. I tell people when you deal with infinite banking, you want to have two mindsets: banking mindset and compound interest mindset. With the banking mindset, here's why this is important: because now the banks take that liability and turn them into assets. How do they do that? Kenya comes along and says, "Hey, Bank of America," or whatever bank we want to say, and I'm just saying that because that's the first bank that came to mind. I need a loan for my business. So they're going to loan her $100,000 and charge her 10%.
Wow.
Where they paid Kat 1%.
Wow.
So they make money on the difference. That's called arbitrage.
Wow.
Okay. That's called arbitrage. So a banking mindset is you're going to pay interest so you have a chance to earn interest. Now, if I would have went up to Kenya outside of this and said, Kenya, I want you to pay interest on your money so you can make some more money, she'd be like, why would I do that? That sounds stupid. Right? Which it does to the untrained ear. Yeah. But when you think about what banks do, that's what they're doing all day long. They're paying interest to make interest. So when you understand that, what we want to do is replace Bank of America with Kenya.
Wow.
So now she's paying interest to make interest. Go ahead.
So you're potentially telling me if I have one of these accounts set up, right? Mm-hmm. If I needed to do an upgrade on my kitchen at the house, and I needed to take out $10,000 out of my account. Mm-hmm. I'm going to be charging myself interest on that $10,000 that I just took out, and it's potentially tax-free, like you said earlier in the episode. You know what I'm saying? I like for our viewers, you know what I'm saying? People that want to research and stuff. Yeah. So it'd be tax-free, and then as I'm paying back that $10,000, I'm earning interest on that initial dollar that I took out.
Now, with you saying that, you have the concept. You have the concept. Yeah, okay. You have the concept.
Wow.
Let me say this. When you're paying that interest, you're going to pay that interest to your insurance company because they got to make money too. So that interest that you pay on the initial loan is not going to go to you. It's going to go to the insurance company. But then the interest you pay back on the money that you borrow, that goes to you.
Wow.
Okay. Yeah. Now, the other thing is, it's not potentially tax-free. It's 100% tax-free because how much do you pay? How much taxes do you pay on a loan?
How much taxes do you pay on a loan?
Mm-hmm. If somebody gave you $100,000 for a car loan, so you can go buy a nice Mercedes or a student loan, how much do you have to pay in taxes on that? Nothing. You don't pay taxes on loans.
Yeah.
So right? There's only 3 forms of tax. You got it.
So got it.
That's how something like that will work. So that's the banking mindset. Go ahead.
Let me ask you something, Hasani. For those people who are at a lower level of financial abundance, you know, we talk about, we love kind of on this show, we love talking about how people can come up. But I know that if we are having this conversation and we keep saying things like $100,000 or a loan or something, you know what I mean? There are listeners who are like, that's so far outside of my mindset. I'm on, food stamps, or I'm just trying to living well. And that's so many people here. We all know that where we living paycheck to paycheck and barely scraping by paycheck to paycheck. What can we tell those people about what they can do with the little amount of money that they have? Because what we do see is people taking, even though we don't have a lot of money, we have kind of that mindset of wanting to be abundant, wanting to have that feeling. For a lot of people, money is very emotional, right? And so you get that feeling by buying the Gucci belts or by buying the knockoffs, I saw somebody at the DMV in the whole, it was the hat, it was the outfit,
Gucci head to toe.
It was all Louis Vuitton, all the way to the shoes, and you standing in line in the DMV. So
we can
how do we
30,000 in debt?
Right.
Negative 30,000 net worth.
No debt, no nothing. There's nothing, right? Yeah. No money in the bank whatsoever. Can't even get a bank account. Okay,
right.
And so, but we do have that. We do sometimes in our community, we have that mindset of kings and queens, that's been passed down through the generations of us overcoming so much. So, we are strong people, but we can't even see sometimes out there what you're talking about.
Yes. Okay. So this is great. And if you guys can see my hair standing up because I can speak on this. Because let's talk about it from a historical perspective. Why do we act that way? Well, historically speaking, you have instances where we were Tulsa, Oklahoma was not the only place that was burned down that was a thriving community. Okay,
speak on it.
Let me just say that is not the only place that we were thriving. And if you look historically, what happened is you have banks that were done with black folks, owned by black folks, and these banks went under. Or let's take it a step further. They got taken over by the commercial banks, basically white-owned banks. And when they were taken over, the accounts for the black residents were disregarded. And basically, it was I'm trying to remember the technical word for it, but basically the account the people that were banking lost their money, all of it. Like, and there was nothing to do to give them anything back on it. They just said, "Hey, you don't have your money anymore." That's it. Mm-hmm. This happened.
That's why we don't trust banks. That's why we put the money in the mattress.
That's exactly
so your grandma
my
puts
point.
her money in the mattress.
That's exactly my point. Because this was not just during the Great Depression for us. This was not just during the Great Depression for us. This was before that. Then when you had insurance companies, you had certain types of insurance peddled to different communities for different reasons. For us, it was burial policies and whole life policies, usually 10,000 or less. So because of that, we were bred to think about insurance from a very small standpoint. So one of the things that I do is I talk large numbers because I want to challenge your thinking. I want to challenge the way we're taught to think and taught to act when it comes to these type of numbers. And if you don't have 100,000 now, that doesn't mean you're a bad person. Now, the next challenge is think about how you can get it. Think about how you can get it, right? Now, don't get me wrong. I still respect people that don't have it yet because I didn't have it once upon a time. Right. And I can't forget that was my path. That would be irresponsible of me. So Kat said it earlier. Even if you don't have 100 grand, starting with something is better than nothing. And what I mean by that is being that this is a concept, will the concept work with $250 a month or $100 a month? Yeah, it will. It won't look as good if it was bigger numbers, but it'll still work. Right. So and that's what I would say to anybody listening. Don't get discouraged by the numbers. Catch the concept and then start planning. When can I get these numbers? Or better yet, meet with somebody to go over this with you so that you can implement the strategy, and then we can start talking about when you're going to get to these numbers. Right?
Yeah,
because
my money start multiplying now.
That's it.
Look like this
look,
in the
and here's the other thing.
What is it? 10 years down the line.
And
15 years.
And here's the other thing I'll say to that too. We wouldn't be here if it wasn't for the sacrifices that some of our folks made, where they knew they wouldn't see the fruits of their labor.
Tremendous.
Mm-hmm. Right.
They knew they wouldn't see the fruits of their labor. So the reason why I'm saying that is because if you feel like you can't do all of that now, then do something where you can get life insurance to pass on to the next generation. You may not see the fruits of your labor, but you know you did something to create an estate and change the trajectory of everybody else. So because you learned something, you did something different. That's how I would respond to that.
That's huge. And I want to speak to that because you made an outstanding point, Hasani, especially about Black Wall Street. And I don't know if people know or enough people know, but this past Memorial Day was the 100th year anniversary of Black Wall Street being burned to the ground, right? Right. And I love how you spoke on the fact that Black Wall Street, it's like we talk about Egypt and Africa, right? As if Egypt was the only place in Africa that was thriving. And Egypt was just a microcosm of what was happening throughout the entire continent, right? Correct. The same thing with Black Wall Street. And that's so important because Kat and I, we actually watched a documentary last night by Tariq Nasheed, right, who created Hidden Colors. He has a new documentary called Bug Breaking, which is freaking phenomenal, right? And in it, he talks about Ida B. Wells and how she was really the first person to bring to light that a lot of Black men who were lynched, right, there was this misconception that, they're raping white women. So we have to hang them from a tree and castrate them. When in reality, those were Black business owners, right? Correct. They were business owners who were competing to the community. They were competing economically, and they were a threat, and they had to be eliminated. So it's so important. Like, Kenya, that's an amazing point you just made, because a big part, like, I work in finance as well, obviously, right? Hasani is much more experienced and obviously a freaking master in infinite banking. But the main thing that I've run into is the mental aspect. It's not so much financial. Like, Black people can get the money. We can get, I've seen single mothers on a welfare check create the amazing Thanksgiving dinners, right? Like, we can get to the freaking money. It's a matter of what are we going to do with the money.
Yeah. Right? And to that point, the language that was used in Ida B. Wells' time when they were lynching people is the same language that is used today. Look at what they said when they were catching the folks when they were hanging them. Listen to or not listen. Read what they were saying about why they did it, and then read what's happening when folks is getting killed today. It's the exact same language, exact same.
That's right. That's
right. And go ahead, sister. Go ahead.
Oh no, I was just totally agreeing with you. You know, I have, you know, of course, especially these last few years, what we've seen is something that a lot of young people, a lot of people of our generations, seeing things that we never thought would happen, that we never thought would recur in our communities. We felt so safe, and you know, it's been so glorious since other people had to fight, had to fight for civil rights, and our parents and grandparents, and those days are over. And so it's been, for many of us, for many Black people especially, we're like, well, we knew that was just kind of underlying. It's never just been gone, because we have all experienced racism in some form or another, microaggressions, major aggressions. We've experienced all of that. And so, yes, all of that is not a thing of the past. We're seeing people opening up, a lot of racist people feeling free and opening up, being okay with being racist and being okay with putting down, hurting, capturing Black people. And
literally,
yes, totally. And so the language that you're talking about has always been there.
Correct.
It's always been there. And it's just now we're seeing more of it because of media. You know, we're seeing, so I don't want, you know, I'm always telling people, because I do diversity work and stuff like that, I'm always telling people, don't think that this is something new, you know. And so, you know, some of my white friends, they're like, oh my God, this is so shocking. And I'm like, well, not to me. You know, it's
depending on who you're talking to.
Right. And so the money, where money comes in, and the property, like you were saying, Tulsa, Oklahoma was just one of many. And so people, only because of social media, I think people are starting to see these things. So many people never heard of it, never heard of Black Wall Street.
Shocking.
You know, had never, ever heard of it. And then they think like when people start talking about slavery, oh, what's the problem? It was so long ago. You know, I have a friend who's younger than me, whose father survived that Tulsa massacre. And he was 12 years old when that happened. So I'm sorry, it wasn't that long ago. You know, and so we are still struggling with that. But what I see with people like you, people like Kwesi, a lot of the people that are out there to help our community gain some of what's so out there abundantly for us, so many other people, is that we can do that too. You know, we can do anything. We've certainly survived everything you can imagine. And so then what we just need is people that are like you, helping us to figure out how to do that, and dismantling that mystery, you know, because it's like this hidden thing where only these people can achieve that, or because these people are smarter or better, or they're privileged or whatever. You know, yes, that's a truth that we all have to live with, but the capability is there. The ability, the capacity for our community to do the same thing is there, right?
And if anybody wanted to look that up real quick, I'm sorry. Go ahead, Kat. Go ahead.
No. I just got to finish that thought.
If anybody want to look that up, there's a movie called Rosewood.
I haven't seen that in a while.
Rosewood was a real place, and that was a real scenario. That was a real happening. That's something that I would say that you could look up. You could look up the Seminole Wars in Florida. You could look up the there's another spot in California, and I can't remember right now. I think it's Allendale, Freetown. It was a free town called Allenville or Allendale. I'm sorry, I lost it. But my point is, those are references you could look up to see that to Kenya's point, not only did we survive, but we also thrived, right? We did well. And these are examples of it and proof of it. And then the last thing I will say is in reference to money, to change people's perspective, Nielsen has a study every year called the African American Study. And it shows you where African Americans spend their majority of their time when it comes to media, when it comes to business, and how they spend their money. And they show that spending power. It's free. You don't have to pay for it. All you gotta do is apply, and you have to apply for it through a business, and they'll give you that. They'll give you that study. The biggest ones for us is media and clothing. Those are our big two.
Yeah.
So I was gonna say, for a lot of people, this past year through COVID, had to lose. Lost their jobs, right? Especially in our community where they had to start becoming their own entrepreneurs and finding other ways to bring finances into the household, right? How important is this concept for all these brand new entrepreneurs in our community, for this family banking concept that you're telling us right now?
If you're serious about generational wealth, it is a pillar. That's what I would say. It's a pillar. If you're serious about generation, say that again.
I said, essentially, it could be a game changer, right?
Absolutely.
In your opinion, if I just started up my business, I'm seeing cash coming in, and instead of putting it into my my mattress, my safe at the house, or just randomly throwing it into the stock market, without having enough knowledge about how to invest in the stock market or anything like that, why is it so much more important to have this family banking concept? And potentially how it can create that generational wealth that we've been talking about?
Great question. So basically, family banking or infinite banking is tied to life insurance. So because of that, you have a death benefit connected to whatever it is that you're going to be doing, right? That's number one. So just based off that alone, someone's going to benefit after you spent your money and had a good time. Number two, it's meant to enhance what you do, not replace what you do. So what do I mean by that? You might have some business folks. You might have some business folks that are good at real estate, stocks, put their money in whatever they do. Well, then all I'm saying is cycle your money through your infinite bank first, put it in your stock second. So now you have money in both places at the same time.
Wow.
Put it in your infinite bank first, purchase your real estate second, because now you have money in two places at the same time. You see what I'm saying? So just cycle it through, and then all of a sudden you have the ability to leverage your funds to where you have your money in two places at the same time.
Wow. So go ahead. Go ahead. Because this is so important. I can already tell we're going to have a part 2 and a part 3. We get to have it, right? And I'm very, very grateful for this conversation. We only have a few minutes left, and I have a quick question for you, Hasani. So, Kenya, you made a great point, right? What if people just like literally, right, tangibly are not in a position for $10,000 and $100,000? I know something that has always benefited our community is group economics. At least in theory, until we put it into practice, but group economics. So let's say I was to get together with 5 of my friends, right? And we all wanted to start an infinite or a family bank. How would that work?
I'll give you one better. Church. A lot of us go to church, and a lot of us have building funds. What you could do is have the church own a policy on one of the members inside the church, and you could build up cash in there and then use the money to go expand the church, build upon the church, help people out in the church. But then you still have your principal in the account. Now, I always recommend that if you're going to pull money out, pull it out to buy an asset that will add money back to your pocket. But essentially, you can help people out. So that's what I would say. Can you do it through group? Absolutely, you can. But my main thing is be organized. Don't just say we're going to come together as friends. Come together and create a company, right? Come together and put together an organization where you're going to put together a service or a product. then go ahead and open up infinite banking, right?
So,
if you're going to come together as friends.
Okay. So for example, with a nonprofit, right? If I'm opening up a nonprofit and instead of putting my money directly into a bank, have one of these accounts set up, and then I can build up the account and then also pull from the account more so than what I would be able to do with my bank account.
Correct.
So would you essentially recommend for a lot of our viewers to kind of, close down those bank accounts and strictly have these accounts, these family banking accounts?
Great question. My answer to that would be no, is because with these accounts, they pull from your bank account to put money in there.
Okay.
So it's an automatic withdrawal, and they have to pull it from somewhere, and that somewhere is usually a bank account.
All right, that makes sense. That makes sense. Well, I have 1,000 million more questions.
Right.
This is only the tip of the iceberg.
I know. So many more questions. I'm like, when can we reschedule him?
Absolutely. But let's do this for our live viewers, for our viewers watching the rebroadcast. I know we got at least 100 people who want a family bank or at least want to learn more about it. How can they find you?
So one of the things that you could do, I should have known better. Text bank to this number, 510-327-8698. Or no, better yet, Heal the Hood. So what I would say is text Heal the Hood to that number. That way I know you came through the broadcast. What we'll do is we'll set you up with a free consultation so that you don't have to worry about spending money to get this information, because that money you're spending to get the information, we'll make sure you spend it to open up the account. All right.
Wow.
So
can you say that number one more time?
Yeah.
Yes. So text Heal the Hood to 510-327-8698. Do that and then we'll make sure that you get information that you need on a ready basis. And then also I'll send you my Instagram so you can follow up there for anything that I might have missed.
Okay.
Wow.
Just a quick question, just like the seminar that you once upon a time went to, do you have any of your own personal seminars now that you do? Okay. And anything coming up in the near future that you can tell our viewers where you're going to be at or anything like that?
So I'm working on starting to make my seminars available online so that for people who aren't in California, who can't make it to my office and things of that nature, I'm gonna start. So through my Instagram on my link tree, I'm gonna make the link available when people can actually log into my live webinars. And in those webinars, we'll go into more detail about what banking is, the details of how it works, and all those good things. That way, people can get a better understanding of how to do this for themselves.
Okay. Wow. Any websites you want to throw out there for the viewers or anything associated like that? Emails?
So right now I don't have any. I'm new to the social media game. I know that's crazy to say, but
you're
I am
phenomenal at it. What you talking about? What's the handle, brother?
I just started in December. So Instagram at HZHouston12, at HZHouston12. That's yeah, you see it right here, right? Yeah. So you can find me on Instagram. I will say that's the best way to catch up with me. If you don't text me find me on Instagram, and then everything else will build from there, and we'll pretty much do it like that.
Whew. Yeah, we definitely gotta get you back for.
I was about to say, and I'm open to come back, because there's definitely more that we didn't get a chance to say, but I think we said enough to where people can learn. They learn about what the concept is. They could chew on it, and then we can make sure that when you text me, I'm gonna give you some references so you can research on your own as well. And then we'll just build everything from there.
Yes.
Is it one book reference you can throw out to our viewers real quick?
That is a great question. You know what?
Rich Poor Dad.
We could do that, because they the way he talks about it is he talks about it indirectly, but everything that he talks about you need for investments, you could find in an infinite bank.
Just because I'm sorry, viewers, just because he quoted Robert Kiyosaki a couple of times.
He did.
Yeah. No, because Robert Kiyosaki has some great fundamental things that you can learn. Absolutely. Money, Wealth, and Life Insurance by Jake Thompson. Phenomenal book. Just to give you an introduction to how the relationship between insurance and money and how insurance is not made just for you to benefit when you die. That is a great introductory book.
There you go, yo.
Doggone it. That's enough. That's enough free game. You gotta text Heal the Hood. Text Heal the Hood to 510-327-8698. Follow this brother at H is in Howard, Z is in Zebra. Houston is in Texas, 1-2 on Instagram. Phenomenal content, some more great information. But at the end of the day, if nothing changes, nothing changes. If you were even intrigued a little bit by the information this brother had to share, the least you can do, text that number 510-327-8698. Text Heal the Hood so he knows who sent us. But that being said, thank you so much, Hasani. We really appreciate your time. Anything else?
Thank you so much.
I just want to say thank you for the opportunity to come here and speak. I appreciate y'all taking time out of your day, providing a platform. I look forward to doing it again. So whenever your people get in contact with my people, I'll just play. We'll make it happen. We'll make it happen. It's on the calendar. Thank you very much, everybody.
Thank you.
We're about to close out, everybody. Make sure that you follow us on IG at ach.show. And that's ach.show on IG. You can also follow us on the Heal the Hood page on Facebook and Heal the Hood on YouTube to rewatch the live broadcasting of this video. Where can they find you at, Miss Kenya Asa?
Y'all can find me at Ruby Envy on Instagram, at Ruby Envy on Twitter, at Ruby Envy on Facebook, and Kenya Asa on LinkedIn. And yeah, man, we're Ruby Envy Wellness, and we're here to help women support their journey towards holistic health and emotional wellness.
Where can they find you at, Kwesi?
Yes, at Kwesi.dreams. That's at KWESI.dreams. I also work in the financial industry, but my specialization is generational wealth building, legacy planning, and all around financial education. So if you would like information that Hasani didn't share with you, feel free to reach out to me. I'm more than happy to help. Brother Cat.
Feel free to reach out to your man Cat Fitness on IG at Cat Fitness 3, on Facebook at Cat Fitness, and then the website is www.catfitnesswellnesscenter.com. Make sure if you're interested in weight loss or better understanding a plant-based diet to lower the risk of getting like diabetes, high blood pressure, heart disease, all these things that we see so commonly in our community, feel free to reach out and we can set up a consultation, y'all. But once again, thank you for tuning in to another episode of Anything Can Happen show. We will see you next week. Peace out.
Peace.